Tai Wai, Chief Market Strategist with JPMorgan Asset Management Asia, joins us live from Hong Kong via Skype. Tai, good morning. Thank you for joining us. Tai, the news from emerging markets says that the contagion effect has stopped and emerging markets have stabilized. Do you think the worst of the fall in emerging markets is over?
I think for the time being, first of all, I think it's very important to differentiate within emerging markets. Obviously, India and Indonesia and Southeast Asia have went through a very turbulent time in the past 1 or 2 months. But if you look at some of the markets like China, Taiwan, Korea, even some of the Latin American countries, the equity market have actually done reasonably well. So while I do think that we are going through a patch of stabilization, really as we run up to the FOMC meeting next week, it's also very important not to paint all emerging markets with the same brush.
Tai, hi, morning. What happens if the Fed does decide to taper in its 18th meet, and what do you think would be the impact on emerging markets, particularly like those like India?
Well, I think the market is already expecting the announcement to take place next week. I think the key here is how aggressive the Fed is going to be when it reduces the asset purchase each month. I think the market's generally expecting from $85 billion to somewhere around $70 to $75 billion. Obviously, if the Fed is going to be more aggressive than that, it could put more pressure on emerging markets, especially current account deficit countries in the short term. But I think the market is already pricing in a significant part of that tapering.
Tai, to your mind, what are the chances that on 18th of September, Fed just decides to play safe? They follow the strategy of kicking the can down the road, and the 18th event becomes more like a no event.
Well, I think if the Fed does nothing next week, there may well be a relief rally in the short term, but the reality is the Fed will eventually need to face the need for tapering. And also the fact that it's been communicating quite clearly to the market it wants to move soonish, that postponing this move could lose credibility, especially as we transit into a very important period where the Fed chairmanship is going to change hands. So I think the reality is if the Fed does postpone its tapering, it may well provide a relief rally in the short term, but it does raise the question of Fed's credibility for the longer term.
Tai, what's the call on India, though? Because Indian markets, as well as the currency, got hammered out up until last week. And this time around, we're seeing a great short covering-led rally. FIIs have turned buyers in yesterday's trade. And we aren't really seeing as much of a pullout as one would fear about. What's the call on Indian equities now?
Well, I think in the short term, Indian equity will still probably go through quite a difficult phase, not only because of the currency. Obviously, that has been a driving force to some extent. But I think some of the measures taken by the authorities, while it's the right thing to do, it is going to put more pressure on growth. It is going to put a bit more pressure on earnings. I think more importantly, some of the on-the-ground earnings outlook still seems to be somewhat conservative. I think we may see some more disappointment in earnings, and that could put a bit more pressure on Indian equities in the short term. Valuation is very attractive, both in terms of equities and currencies, but I think a lot of the bad news is still yet to be fully priced in, and we may see more correction in the near future.